Okay, so we are getting together today because we've been having a lot of conversations about insurance policies changing, some movement in the pricing, and then just some things going on with climate in general that are really important to talk about here locally in Hawaii. And so today I have Brian Hirono, which if you want to give a quick intro of who you are, and Ricky of who you are and what you work for, and then we'll kind of dive into some nitty gritty. Yeah, go ahead.
Hi, Marina. So if you haven't already met me, my name is Brian Hirono, aka the Mortgage Millennial. I'm a local lender here in Hawaii, licensed in many other states across the nation, specifically helping a lot of our veterans, our active duty soldiers, getting into the homes that they want, and also our first-time home buyers. Those are kind of two of my demographics and my people. So that's kind of who I am.
Yeah. Ricky, who are you and who do you work for?
Hi, Marina. Thank you for having me today. Ricky Muraoka, Allstate Insurance. Our office is located in Kahala Mall, and we specialize really in property and casualty insurance, which is car insurance, your home insurance, and obviously, like we'll be going over today, condo insurance. So those three things are what we help our customers with, just to make sure they're properly covered and hopefully getting them the best price possible as well.
Absolutely. Yeah. And then for those who don't know me, in case this video is shared from Brian and Ricky to their clients, I'm a real estate advisor here in the States. Really pride myself on the education side and advising you throughout life on a buy and a sell and different transactions. But my clients find me on YouTube all the time. They watch videos like this and end up reaching out. And so I love that this is a way that we can build relationships online first, so that by the time you're ready, we're just ready to rock and roll. So this video is going to be super educational and a little bit on the nerdy side of like what is happening with insurance, why do we need to care, right? But some big things are changing. So how do you guys want to take this? Which direction should we go first?
Yeah, so I mean, we're talking about the ever most exciting topic of insurance, but from the lending perspective, it's so important because, as a lender, the bank will look at the collateral or the property that you're purchasing, and the bank will want to make sure that their interests are protected, right? So because they're lending a lot of money, and homeowners insurance is important, but we also look at the master policy if it's an association. So we'll talk a little bit about that as well today here. So there's a couple of different insurance policies at play. Ricky, can you talk to us from your perspective? What are some insurances that you see often when it comes to home buyers, and why is it important?
Whether you're purchasing a home or you're purchasing a condo, like Brian said, the loan is going to require that you help to cover the structure of the investment that the bank is investing in. So for condos specifically, there is the master policy, which is the one that is owned by the building, and that is responsible for a lot of the different things that need to be covered when it comes to common areas and the structure itself. The loan is also going to require you to have your own personal policy, and that one complements the master policy. So both work together, and your personal policy is going to cover all of the repairs that are too small for the master policy to get involved with, as well as your furniture, your content. It covers loss of use. So if you're not able to live in the building because the conditions of the unit are unlivable, as well as liability. So if you're the one who causes damage to another unit because you were negligent, all of that needs to be covered under your personal policy. So that's why that policy is equally as important as the master one that the building is carrying.
Yeah, awesome. What I learned very early on in my career is that the condo personal policy, which also is called the HO6, right?
Mm-hmm.
That covers everything within the four walls of your unit, and the master policy covers everything outside. Is that correct? Is that like a simple understanding of it?
Yeah, that's the simple understanding. And the master policy, while it only gets involved if damages exceed a certain level, it is going to rebuild your unit as it was originally built. So any renovations or upgrades you've made to the unit, that also needs to be covered under your master policy. So the more work you've had done, your coverage needs to reflect that.
That's good to
Good
know.
reminder.
Why is it called an HO6 policy?
I mean, it's just insurance jargon, to be honest. The H and the O stand for homeowners, and then it was assigned to the condo policy. But it is a very universal term. Any insurance carrier or person will know about it. And even you guys in your industry, it's been thrown around so much that it is just a very common way to say condo insurance, even though it is a more technical insurance term.
Yeah, awesome. And I know you've been in the insurance industry for quite some time now, but in your time in the industry, where did you see condo rates at when you first started? Where do you see it now, and where do you see it going?
So when I first started, just price range wise, it started probably anywhere from $100 to $200 just depending on the coverage. And since then, it's gone up slowly over the years, just like anything else with inflation and just the changing landscape of the economy. But what's really kind of jump-started the changes this past year or so is, I think ever since COVID happened, with people staying in their homes more, working from home, and just some of the buildings in Hawaii getting older, there's been a lot more condo damage, whether it's just because the buildings are older and water damage seems to happen more frequently in those buildings, or if it's because people are in their properties more and, that just lends itself to more accidents happening and things like that. The amount of claims has just skyrocketed over the past few years. And whenever that happens, insurance companies are going to need to raise their rates to offset that. And the other thing that triggered is that the master policy, in order for them to put more of the insurance burden on the owner and, in order to keep their price down for, these master policies for the entire building, they're raising their deductible, meaning that anything before that, the owner has to cover. And so because of that, it's ending up making the owners have more coverage. So more coverage, you're going to have to pay higher as well. So it's not just the price of insurance is going up, but the master policies are requiring you to have more coverage. So that's just going to also contribute to the price rising as well.
Which that goes directly into HOA, right? That's where you're seeing that increase?
Yes. So they're trying to keep your HOAs as similar as possible by making you have more of your own personal insurance. So that's kind of like the trade-off.
Okay, so lots of information to unpack here. So just going back to like when you said you first started, the rates were $100 to $200, right? Is that $100 to $200 a month?
A year, actually. So these are generally pretty affordable policies. So even though there is, the rates are just kind of going up gradually over the last few years, and then a little bit of a slightly bigger hike this year, when it comes to qualifying for these properties and the loans that you guys have your clients working with, every penny counts when it comes to those ratios. So even if it is not a couple $100 a month or anything like that, it's certainly still affecting buyers and borrowers alike.
Yeah, for sure. Because like $100 to $200, and Ricky does my personal insurance actually, and also I recommend a lot of my clients to him. And typically for condo insurance policies, we were seeing like about $270 a year. So that's like $22, $23 a month, which is like probably less than someone's really bad Starbucks habit, right, on a monthly basis. So it was really inexpensive. But like Ricky was saying, that we're noticing in the industry, and I might be late to noticing this, and I think people who are in your industry, you guys have probably been dealing with this for the last few years, but we're just noticing this in the last few months, if not the last few weeks on the lending side, is that, the policy annual premiums are definitely going up. And we're also seeing, because we have to review the condo master policy itself, that a lot of these condos, there's a handful of condos now here in Honolulu and Oahu that don't qualify anymore to be collateralized, right? Because their master policy is failing. And so it's kind of this like very murky, season that we're in, because as lenders, like, clients ask me, oh, I'm interested in that condo. It's been pretty okay. There's a few kind of like red flag condos, but like most of the condos, we know they're, it's going to go through. But now it's like, I don't even know, because I don't know if this condo can be financed or not financed. From, what I've also seen and heard, is that even the newer condos that are the higher end ones out in like Kaka'ako and stuff, they're failing to meet the minimum requirements for certain things in their master policy, and therefore can't be financed using conventional loans.
Okay, so those are like fighting words. So let's get into that a little bit, because I feel like people are going to be like, wait, what? My brand new building doesn't have enough coverage? Like, can you share a little bit more?
I shall not name names, but I was just speaking with an industry colleague of mine, and we were discussing this issue about master policy. And just to backtrack a little bit, whenever you do a conventional loan or any sort of loan, one of the categories that we have to analyze and underwrite on is the collateral or the property itself. And when it's a condo, it has to go through condo underwriting and get condo approval. And then there's, buildings that won't get condo approval because of, one of 50 different reasons. But insurance so far has never been an issue in the last couple of years. But in the last few weeks, I'm starting to notice that they're failing condo review and coming back and saying, oh, we won't lend on this property. And the reason being is that their hurricane coverage is too low, or their liability coverage is too low, or this and that. And it all pertains to the insurance and sometimes the reserves or the financials that's tied to the insurance. And so, if a condo is not doing well, a condo is a business too. So they have to have their own budget and reserves and all that. If they're not doing well financially, then, they're going to have to cut costs. And some of the places they're cutting costs are on the master policy. And therefore, the owners, unless they're very active on their board, don't know about this. Your regular Jane and Joe Smiths, or John Does that we might come across, the clients, if they're not aware of this as sellers, it's going to be really hard to attract buyers. And we're already in a very tough market as it is with interest rates and yada, yada, yada. So this is adding another kind of challenge to the whole game of buying and selling real estate here in Hawaii. Now, as far as the insurance side goes, Ricky, here's how I see it. The condo associations had made a decision, whether it's consciously or subconsciously. Do we raise HOA dues, or do we pass that burden onto the individual owners so that they can shop for their insurance? So it's kind of a double-sided sword, right? No one likes HOA dues. And, come on, let's be honest, right? But at the same time, would you rather pay higher HOA dues and pay lower insurance? Or would you rather pay lower or the same HOA and shop around for insurance? So to each its own. But, at least in my perspective, when you're able to shop around for insurance, you have some options, right? You can shop around, you can compare quotes, you have some flexibility, whereas the HOA, you have no control over. Tell us a little bit about what a first-time home buyer in today's market, with the higher interest rates, all this stuff, all the challenges that they're facing, they're being thrown an additional challenge of higher insurance rates. So how can they combat this? What are some products or strategies that you would recommend?
One of the things that, at least with our company and the way we do things, and it might work the same for other companies, but if you're going to buy a property, whether it's a home or a condo anytime soon, you might want to start by getting a renter's policy, because that kind of builds up your insurance history, and it would actually allow you to qualify for a better condo rate. So if you were renting, living in an apartment or anything like that, and knew that you wanted to buy a condo, you could kind of get ahead of it by starting with a very cheap renter's policy that will also cover you while you're renting. It'll cover your personal property. It'll cover your liability if you damage or hurt anyone else. So it has its own functions in its own right, but it would it would allow you to enter your condo insurance at a better price. So that's one of the things that we're starting to encourage, if people know that down the road or in the near future, they're going to be buying a condo policy, because otherwise you'll have to go to some of the extended markets, which are where the higher prices are. So that's one thing. The other thing is always the only way to get the price down, other than decreasing your coverage, which we're never really encouraging. The coverage is there for a reason. And if it ever needs to be used one day, you're going to be happy that you had the amount of coverage versus going short on that side of things. So the only other way to get your price down is discounts. And the most obvious one, the one that you'll probably hear about the most, is bundling, all of your policies together to qualify for those discounts. And so whoever you may have your insurance with, it's always a good idea, if you're looking to save on price and things like that, to ask your agent to see if there's any discounts along that line that you could be taking advantage of. Those are the two things that, price-wise and just preparing for the future-wise, are things that you can kind of look into, especially as a first-time home buyer.
Absolutely. That's a great tip.
Yeah, I did not know that renter's insurance helps you get cheaper or better homeowners insurance quotes.
It's starting to, at least with our company, because you'll be able to just, rather than go from scratch to the condo policy, you'll be able to go from the renter's policy and just switch it into the condos, so to speak, kind of in a way. It doesn't work exactly like that, but it is going to allow us to get a better price than if you're just coming in off the street first, just trying to buy a condo right off the bat. So it just does happen to work like that with us.
Good to know. Good to know. We established that, when you first started, it was $100 to $200 per year for your annual premiums. Now, since we've been working together, we've been seeing about $270 as kind of the average.
Mm-hmm.
Where can we expect to see the annual premiums for condos today?
I would say the reason, like I just mentioned about the renters, if you actually did the renters thing, we could still get you $270. around there. Yeah, it's just hard to, obviously life happens in ways where it's hard to just game plan like that and be like, hey, I'm going to get a renters because I'm going to buy a condo in 2 months. But if you are just, you're looking for that place to buy, I would say it's going to be anywhere from 350 to 400. That's going to become the norm. As these associations are requiring more coverage, that number is just going to go up based off of them making you get more coverage. So I would say, I wouldn't be surprised if in the next year or so, the market average would be somewhere closer to $500 for a condo policy, somewhere around there. If you think about paying $270 a year, and then all the things that go wrong in a condo, like massive water damage, someone overflowing their tub, some pipe that nobody can see bursting and affecting multiple units, or obviously things like Marco Polo fire or, a Lahaina fire. The insurance company getting $270 a year is not going to offset the massive amounts of damage that actually happens in these buildings. So it's kind of reached that boiling point where now all of the insurance carriers finally need to do something drastic so that they're not just bringing in these small amounts of money when these claims can end up costing so much. So that's what it is. It's something that all the carriers are dealing with all at once because everyone is going to have units in every building. It's just something that's happening in the state of Hawaii.
So here's a question. So I know you mentioned like Lahaina, Marco Polo fires. Even if it doesn't happen in my building, at my unit, or even on my island, or even on my state, those kind of disasters and tragedies, does that affect me as well?
It does way more so in the property landscape than, in car insurance. In car insurance, if you're the one who gets into the accident, they're going to hit you with that surcharge the next time because you had just got into an accident. With homeowners and with condos, if you put in a claim, they're not going to raise your rate because you just put in a claim because you got something repaired. But as those repairs add up, companies across the board are going to be forced to do statewide rate increases. So that's where we're at right now, where a lot of the carriers either had to do statewide condo or home increases, or some carriers are just having to do moratoriums on certain buildings where they can't. In that sense, it'll be more building specific. If a carrier says, hey, you know what, that building just has too much going on, we're not going to sell policies to that building. And that's happening in Hawaii as well.
Which there's a list now, right, of buildings that are not approved and growing?
It's going to vary depending on the carrier. But yeah, it just depends on which carrier can accept which risk from each building.
Got it. Okay.
One of the things that, industry colleague of mine were talking about is how, initially they were looking to buy this one condo, a unit in this condo, and, their homeowner's insurance quote was $30 a month, right? And as the lender, we use that $30 a month as part of their monthly liabilities or their expenses when we calculate their debt to income ratio and their housing expense ratio. So, we were using that, but then all of a sudden, when it went under condo review and it came back and said that, the hurricane coverage is way too low. And the only way that the condo underwriter would approve the condo is if the borrower, the buyer, got gap insurance to cover, the difference of what the master policy covered versus what they would have to additionally cover. And that put them in about $300 a month.
Mm-hmm.
And bump them up. So almost that's like 10 times more, right? Is that something that is like very bizarre, unlikely, or do you see that could be happening more and more often?
It's going to depend on the lender. And to be honest, that one sounds more like someone who's not, maybe that bank doesn't do too many condo loans in Hawaii. So I'm hoping that's not the case because that is really bizarre in my opinion. And, hopefully that's not something that lenders or that banks will start requiring, because when it comes to hurricane, it's not going to just hit one unit, it would hit the whole structure. And then at that point, it really would be on the master policy. So your hurricane policy really just covers, if you do end up getting one for a condo, it's really covering your furniture, your contents, and then as well as any improvements. So that's what hurricane condo insurance has always been designed to do. So for it to have to cover the gap, it is going to be very pricey if they make people do that. And that sounds like what happened to your one borrower. I'm hoping that's an uncommon trend, But with everything changing as much as it is right now, it's hard to say how things are going to be moving forward, especially when banks, they need to protect their investment as well.
Yeah.
So they're going to require what they need.
So the building is Keolalai, which is, a pretty established building in Kaka'ako. The lender was ASB.
Oh, wow. So it was a local.
It's a major bank, local too, right? And
with a
so
lot of exposure here.
yeah, and so it's like, they only covered about 15 million in total. The building is worth probably like 40 to 50 million.
Yeah.
It was way too short. And they said, they sent out a letter to the owner saying that, starting on X date, you have to get gap insurance.
Do you remember what amount of coverage? I'm just curious because I haven't run into this yet.
I haven't gotten that like detailed of an information, but that's where the homeowner, their insurance policy went from $30 a month to $300 a month. Now, luckily in this case, like they weren't trying to qualify to buy a home, but still that's like a tenfold increase in their
of course.
Mm-hmm.
So it's kind of like a big blow, especially if families are living paycheck to paycheck here in Hawaii. An extra $270. I mean, that's like a car payment for some people.
Mm-hmm.
That's kind of huge, So insurance side, we have some options. We're trying to make lemonade with some lemons we've been dealt with, right? Like, prices are going to go up. We just have to face the music and we have to deal with that. So on the insurance side, there's going to be some different programs like, or strategies like getting renter's insurance. Like that's something I learned today. On the lending side, this is why even more so now, like, whoever lender you're working with, you want to really get strategic and creative about the different Buydown programs that your lender is able to offer. Now, I have a video on YouTube. It talks about the right type of Buydown for you. Now there's temporary Buydowns and permanent Buydowns. Go watch that video if you want a little bit more information, or better yet, schedule a phone call with me and then we can kind of explore the different options. But that's where, you really have to get creative with the industry professionals that you're working with to get into the home that you want. Like the message of this video isn't gloom is me, like a very negative message is not what we want to send out. We want to just reemphasize that that's why you want to work with the experts that know how to get creative, that care about your financial well-being, your goals. And, that's where synergy and teamwork is so important.
Just knowing also someone who's doing multiple deals a month, like you're going to know these condos more than anyone else. And so before we even offer on it, you can say, hey, just potential red flag on this one, or I know this might be an issue and a speed bump we're going to have to hit. That's great intel on the buy side. Absolutely. So thank you. So let's say condo policies are going to go up, or even for someone that has already owned one, are they going to expect a big increase in the next 1 to 2 years? And how does that play into their monthly numbers?
So I think it is just going to, like everything else, go up, and the next hike might be within the next 1 or 2 years. It's going to sound drastic, and it is in the scheme of condo insurance, but I would expect about probably a 100% increase around there in terms of how much a policy costs right now versus what it could cost in 1 to 2 years. And it's just, they need to offset the amount of claims and the amount of damages they've been paying out. So it just seems like it's heading that direction.
Yeah. So this is where it's really important to know your numbers. So even as someone who has bought before, you own it now, you're living in it now, but you're PCSing next year and you want to rent it out, or you want to make this an investment property and move on to the next one. That little bit of margin can be sometimes a saving grace of hiring a property manager or not being able to afford one, right? And on the buy side, like, okay, great, we got pre-approved for $500,000. We're so excited. Oh, wait, now we have to account for this extra amount. I mean, Brian, what does that look like comparison wise?
So yeah, I did just for my own entertainment sake and research sake, I did some numbers. So 500,000, just because that's kind of the average condo entry, 2-bedroom, 1-bath, 1 parking, here in, Honolulu. And for conventional, basically kind of did the math, reverse engineer it. And it kind of showed me that in order to afford a 500,000 condo, 20% down, you'd have to be making about 82,000 a year. So that's about $6,800 a month before taxes. Okay. Now, should the insurance hike up, because that changes the formula in the DTI, if you wanted to qualify for the same property just with the higher insurance rate, you have to be making $500 more a month in income just to qualify for that.
Mm-hmm.
Okay. And so then most people aren't going to get a $500 raise instantaneously, in the few months before or, during your escrow period, so I mean, coming across a $500 raise is going to be more difficult. So what do most people have to do? They have to lower their purchase price. And the math that I was able to crank out was that rather than a $500,000 purchase, it would have to be a $410,000 purchase. So a $90,000 price reduction because of just the few $100 price increase in insurance. So dollar for dollar, that insurance rate, the HOA, taxes, everything, it has a much bigger impact when it comes to qualifying for a loan because it's not simple math. Just because your insurance went up $200 a year or $20, however much a month does not necessarily mean, oh, I just gotta, make that much more down payment or I have to have that much more income. It's a whole different calculation. That's where you really want to, talk to an expert, your lender, and make sure that you're okay with the higher insurance premium.
I would have never known that it could affect that much.
Yeah.
It sounds like you said, like, hey, I just need to, cut out Starbucks and, get $20 from somewhere else, but wow, that kind of blew my mind right there.
Yeah. And then just the property side, like a 410 condo versus a 500 is a big quality of life for people, actually. So, and that's our job as professionals is, well, how can we problem solve now? So this is what we're dealing with. This is what we're anticipating for the future, looking out for our clients and protecting them. How do we get a little bit strategic with some solutions? And I think it is totally case by case, right? So every person's financial background is different. Every person's, what they're looking for in a condo is different. And so we can't give it like a blanket answer, but I can tell you we have a lot of tools in our tool belt. And this is what we do every day is we jump on a Zoom like this and we hash it out and we give you scenarios. So definitely, I think if you guys have questions or you want to see what that looks like, that's what we're here for. So we'll have our contact info in this video description too. Was there anything else that we missed or wanted to touch on?
No, I mean, Ricky, how can audience members that are watching on either, through Marina's network or my network, how can they get in touch with you and maybe do a reevaluation or reassessment of their policies? Or, maybe figure out ways to bundle or come up with strategies to help them get good insurance rates. How can they reach you?
Yeah, absolutely. So for one, you can always get quotes from me through Brian or Marina. So if you're either going through your loan with them or Marina is doing your buy or sell, have them just reach out to me. And then that's always going to be the easiest way. Otherwise, my office is located in Kahala Mall. I'm sure in the video information, there'll be my phone number as well as my email address. So you're always welcome to reach out to me directly from there. But it's going to make the most sense when you're working with Brian or Marina. They can go ahead and link us up, and then we can get you quotes for whatever home you're looking at with the best possible price and the coverage that meets the requirements of the association.
Yeah, awesome. And same thing for existing homeowners. I recommend reaching out to Ricky too, just to see, hey, how can I be proactive about this? Because it's coming. Yeah.
Yeah. So best way to reach me is either calling me if you already have my number. If you don't, you can visit either my Instagram or my website. My Instagram is mortgage millennial _. So millennial has 2 L's and 2 N's, okay? In the middle, mortgage millennial _, or you can just go to mortgagemillennial.com. You'll be able to see some videos, different resources on there. So that's kind of the most comprehensive place to be able to kind of see how creative we can get. And I have some case studies up there too. So for resources, but give me a call. And if you're already working with Marina, she's probably already introduced you to me. If not, then ask her to.
Absolutely. Yeah. This is so valuable, guys. I'm so excited to just, again, be on the forward edge. For me, this is still like new rumblings and beginnings in market talk. So the more educated I can be as a realtor, the more educated Brian can be as a lender, and you, Ricky, having the first dibs on it is always so great to come together and just come up with solutions because things are always changing. So thanks so much, guys. We'll definitely be in touch.
Awesome.
Yay.